Good afternoon. Welcome to our Financing Innovation session as part of Lancashire Innovation Week. We're here at Blackburn Youthstone today, and I'm joined by two guests. We have Sue Roberts from Lancashire Enterprise Partnership and Graham Niven from Tandem Financial Solutions. So we're going to be talking about finance and financing innovation throughout the session. But there's plenty of opportunity for anybody to ask questions. Please just put them in the chat and we'll pick them up towards the end of the session. So, Sue, I'd like to just do a quick introduction to yourself, if that's okay.
Yeah, that's fine. I'm Sue Roberts from the Lancashire Enterprise Partnership. I'm the Commercial and Business Support Manager. I specialise in finance. I've spent 15 years in the public sector, delivering programmes such as Growing Places, which is a £20 million development programme, fund, and Rosebud, which a lot of Lancashire businesses are aware of. Also, delivered inward investment. But I've spent 20 years in the private sector doing a local stockbroker. I've worked in a national insurance company and a global investment bank. So I've got a wide range of knowledge and experience of financial instruments. So that's why I'm here to talk about the Lancashire scheme.
Thanks, Sue. Graham?
Yeah, I run my own business. I'm a funding specialist. So I really do three things. I find funding for businesses. I help with the forecast, particularly the financial forecast. I'm an accountant by trade. I don't do people's accounts, but I'm an accountant by trade. So I make sure the financial forecasts that help support funding requests are valid. And then hopefully when businesses have grown so big and so vast, I'm able to sell those businesses as well. So I do that.
Okay. So a great breadth of experience on the panel today. Just as a quick introduction to myself, my current role, I work at the British Business Bank, working on the mainly the COVID guarantee schemes. But prior to that, I've worked in banking, started a career in banking. Worked in SME finance all of my career in different roles in advisory on the debt and the equity side as well. So really pleased to have you both here today to talk about financing and innovation. And I thought we'd just start off with having a look at what's happened, obviously in the last 18 months with the pandemic, and just to get your thoughts really on how that's impacted businesses. Particularly those businesses that may have borrowed money for the first time. We know that a lot of businesses have taken up some of either the bounce back or the CBIL schemes, and it may be the first time they've borrowed money. And what the impact on that may be then going forwards, and particularly for those innovative businesses or businesses that are looking to do something different. How do you think having that debt now on their balance sheet will impact them?
From experience, I was at a meeting yesterday, the Northern Powerhouse Investment Fund. There seems to be sort of a couple of camps, really. There's those businesses that have taken on debt for the first time and are maybe struggling to pay it back. But a lot of innovative businesses have maybe taken on debt and are actually sitting on a lot of cash. So they might not need debt funding, but if they're at an early stage of innovation, getting the product to market, then they may struggle with getting the right funding if they've got some debt on the balance sheets. However, I always think that innovative businesses will always find a way around of getting the finance that they need. The Lancashire Enterprise Partnership has just commissioned a report into finance, and it shows that there's plenty of opportunity and funding opportunities out there. The difficulty, I think, that innovative businesses have is actually finding what's appropriate to them.
Okay.
And maybe we can talk about that later.
Yeah, interesting.
And I think I really don't think things change that much. I'm one of these who thinks we've been through I've been through a number of recessions and stuff. And the COVID thing, you can argue, is just another source of recession. Maybe a little bit different, but it's the same thing. And ultimately, I think with innovative businesses, I think it's given an opportunity for loads of businesses to really think about innovation for the first time. So many businesses I know have just trundled along and done all right and made a bit of money, etc. But this has made them actually think and either become more innovative or go out of business. But majority have become more innovative and think of different ways of doing things. So I think the story they've got to tell, and ultimately when you get funding, it's all about the story. Ultimately, how much do I want? What am I going to do with it? how much money am I going to make and when? Because funders want the money back, don't they? When it comes down to it, funders want to know they're either going to get the money back via debt and with interest, or they're going to get the money back times a multiple if it's equity. And I don't really think that's changed that much. If anything, I think it's given more opportunity for innovative businesses to tell a better story, because other ones, boring ones, won't be able to tell such a good story.
Yeah, I think it's an interesting point talking about the story.
Yeah.
If a business has borrowed for the first time, we know that the bounce back loan, for example, it was a self-certification form. They didn't really have to provide very much information. But if they're now going to a lender and asking for perhaps some growth finance or some additional funding to take them forwards, they really have to be able to tell that story. So how would you sort of advise them the best way to go about that? What do they really need to bear in mind?
Well, I suppose ultimately it's cash flow is everything. I mean, I'm a big cash flow person. So cash flow is everything, and I think too many businesses focus on profit and not enough on cash flow. So if you don't have a valid cash flow forecast, at the end of the day, all forecasts are based on assumptions, and it's based on historical things that you've done and your assumptions going forwards. And I say this to many people that every forecast I've ever done for anybody's been wrong, because all the figures are wrong. They're all out of date as soon as you've done it. And the only time you ever get it right is if you say sales are going to be 0 next month, and then you've got a chance of getting it right. But as long as it's based on your best estimates, and I always say to people, forecasts need to be justifiable, and therefore going forward in terms of people trying to raise money. So you've got to be able to justify the forecast, both sales and costs, etc. And you've got to show that you can pay back the existing debt, the bounce back or the Sybils that you've got, and then any further finance. And it's maths, isn't it? That's what you've got to do.
Yeah.
So.
I was going to say, and in terms of equity and in terms of innovative businesses, something that came up in a meeting today, access to finance, which is available in Lancashire to businesses. We're saying that a lot of equity is either unknown or misunderstood. So it's about arming yourself with and finding some support to understand what exactly you need to produce. So businesses seem to understand that they've got to produce some documents, but perhaps not the level of detail. And we were saying about, you've got to do your cash flow and all that sort of thing. But if you're looking for equity as well, you need to tap into the business support that's out there. So it might not be cash that you get your hands on. It's actually support that saves you from spending that cash. And in the meantime, you can be looking around for actual cash that you need. So I just counted up before I came here. There's 79 business support programs just through Boost alone. So depending on what sector you're in, there should be something to support you that might save you cash. And that's just in Boost. That doesn't include Lancashire Skills and Employment Hub, which have a number of programs that can help businesses with resources and training. And I'm sure there's been another talk about skills for businesses. So, and then as part of the Boost 79 programs, you've got access to finance, and they can help you with preparing documents. There's an investment readiness program in Lancashire run by UCLAN that can help you. So we do have plenty of support for businesses to get the documents in order, to get the story, and to find there's the Advanced Manufacturing Research Centre that are passed on the way here, Northwest, at Salisbury Enterprise Zone. They've got a low carbon demonstrator that again is support for businesses to innovative products.
I mean, that sounds like there's a fabulous range of support there, but do you think part of the challenge for businesses when they're looking to raise finances, who do they approach? How do they know which is the most appropriate funder for them? Should they be considering equity? Should they be considering debt? And if so, which provider should they be going to? I mean, it's quite a maze to work your way through when you're trying to run a business to find out which finance provider you should be speaking to, as well as having all the information prepared and the documents ready. That's obviously part of what you do, Graham, is helping businesses work their way through that.
I do my best, I try, but there's no getting away. I'll be honest, it's going to, I don't know whether it'll sound bad or not. I think one of the problems is people generally do it once or maybe twice in their career, so they don't really know. So it's not to hand. It's not. They've got other things to do. They're running a business and
And it
finance.
changes rapidly.
And it changes, right? Yeah, exactly. So that's one problem. The second problem is, I would say generally they tend, in my experience, they've tended to go to their bank, and if they haven't been satisfied by their bank, and it's not appropriate, and I'm not saying all banking should be appropriate, then they tend to then go to their accountant, who again they don't tend to talk to very much, except for audit at year end and stuff, and how low can you get my tax. And with all due respect to some of the accounts, to a number of accountants, again, they're not always completely up to speed, because again, they've got other things to do. So I think there's clearly a problem in, if you're a business that doesn't raise funding on a regular basis, where do you go? And that's a marketing thing. That's a marketing information thing about how we get that out there. But it is a problem. Yeah. It's clearly a problem.
Is that something Lancashire is looking at or can help with?
It certainly is, and the report that we commissioned, the initial findings are showing that, you know, its information is out there, and as you rightly described, you know, companies go to the bank, they say no, and they just don't know where to go to next. And, you know, Boost has been created as a one-stop shop to say this is, you know, if you need any business support, but that business support tends to be for the micro and the smaller businesses. As you get larger, you're likely to have a finance or an accountant or a finance director. But what we've identified is that we need to somehow gather all this information to shine a light on the ecosystem that is around Lancashire. I've identified different programs that are in the family of Boost or in the family of you know, Lancashire Business Support, and it doesn't cover everything. You know, it's there to support businesses in specifically, you know, different fields, and that's the problem that businesses face that you alluded to. You know, the bank said no, my accountant said, oh well, you might be able to try this, but they've got limited information. You know, where do you go to? And I'm working with the British Business Bank because they've got developing a hub, and working with other partners, Boost and, you know, Lancashire County Council and the higher education institutions and anybody involved in finance to see how we can focus all our information into maybe some kind of portal, something that we can get some kind of technological solution, but also that points people to a person that can actually help them on the journey. Because with the best algorithms in the world, you are just not going to be able to answer financial questions and somebody's story, especially if it's innovative. You know, nothing's been done like this before. How do you benchmark it? So it's about working with partners to come up with a solution, how we can best inform we've got 52,000 businesses in Lancashire. We want to be able to support all of them, from the smallest to the largest. The largest ones tend to have, you know, relationships with the council or with ministers or what have you. It's that sort of, the small and the medium size, they often, you know, need support and think that perhaps Boost isn't relevant to them or not, but I would suggest that it is, but it just needs to be clear about what support they're looking for and where they can get.
I think it's a personal thing as well. Finance is a personal thing, and I think you can create the best websites and the greatest portals and all those sorts of things, and they're good, but ultimately people will want to talk to people about finance. It's so important to speak to an actual individual, as opposed to, I think it can direct you, but if there aren't the people there then behind it to speak to, and I don't know whether there are or aren't, but and the danger is you get, so let's just say you do your portal and you get, and it takes you down a yes no, and eventually says, let's just say it says invoice finance, and then you're down that road, but it might not be the best thing for you, and trying to get some independent advice, I think, can be then quite difficult, because if you're an invoice finance seller, you're going to sell invoice finance, and it may not be the best thing.
Yeah, that impartial, independent advice is really important, isn't it?
Yeah,
absolutely. So you mentioned a report that's been or some research that's been undertaken for Lancashire LEP. I believe in the report it mentions, you know, is there a funding gap, particularly on perhaps early stage equity finance? Do you feel there is a funding gap in Lancashire for that type of business? And if so, what can we do about it?
Well, yes, we hear all the time that early stage seed funding is difficult to find. I don't know whether there's an actual gap. It feels like it because people say it's difficult to find, but then there are providers out there. So part of the commission that we've done is, and the stakeholder group that I've got together, is to look at the draft recommendations that have come through, deliver an action plan on that. And part of that is working with the British Business Bank on the next Northern Powerhouse Investment Fund, specifically at seed funding, because traditionally that seed funding place has been taken by high net worth individuals, some angel investors, but a lot of them don't, and understandably don't, want to advertise what they are or where they're investing, who they're investing in. Again, like you say, it's very personal. They'll want to invest in people that they know and can trust. So that early stage, I think, is difficult, and I'm working with stakeholders to deliver something that can come forward. It won't just be from the LEP, but we are putting forward a case to the British Business Bank for Northern Powerhouse Investment Fund 2 funding to look at that specific issue, because we think that although there's an angel co-fund out there, and the British Business Bank are saying, well, we don't want to fund all the risks, but I think a lot of innovators and entrepreneurs and with innovative products put a lot of sweat capital into that. They borrow and put a lot of hours and effort into it, and that should be recognised as part of that funding package going forward.
Yeah. Do you find that, Graham, in the work that you do, those young, innovative companies with great ideas, and they just struggle to get that first funding round in?
Yeah, I would say I can get funding for most people, but unless they're bankrupt. But the most difficult group are the early stage businesses with great ideas. And I think we get to get the difference between early stage businesses that have got a little bit of traction and early people who have got ideas. Because I get a load of people coming, I've got this great idea, Graham, and I want you to find a rich angel to fund it for me. And that's just, it's just an idea.
Yeah.
But I think there's a gap, and I've said this for many, many years, there's a gap in this early stage equity fund between, I'd love to say 25 grand to 100 grand. We know that NPIF is sort of, it's about 150 grand upwards. The equity fund is 150 grand to 2 million, and that's too high, I think, for some. And I'd like to see, so you've got your startup loan that goes up to 25 grand, and then I'd love to see like an early stage equity fund that goes up from 25 grand to 100 grand. And as long as the individuals have put in sweat equity and some effort and some money and some hurt money, so that if it goes wrong, they hurt as well, then it just makes them work harder. And I think as long as we've got that, then it'd be nice to get something else and some support. And in terms of, you mentioned high net worths, there's no getting away. They are a bit personal and a bit sensitive sometimes. But if there was a marketplace where they could see what was around, not a crowd QB type thing, which is very prescriptive, I think, in what you have to do, but just a marketplace. Then I understand that the danger of that is that entrepreneurs don't want to give away their secret ideas.
Yeah.
But then sometimes you're not going to get any money.
Yeah.
And it's your own secret.
You have to divulge to a certain extent,
you've got to divulge
to get
to a certain
interest.
extent.
Yes.
Exactly.
Yeah. But still protect your IP.
Of all the funding gaps, and I'm not saying there are many funding gaps, but that is, to me, is the biggest funding gap we have. And I think we as a nation, we are an entrepreneurial nation. I just think we wish we could do a bit more.
So we should shout about it a bit more. Maybe, like you say, some sort of showcase where people could say, this is my new business venture, this is what I'm looking to do.
Are you interested?
Without, like you say, giving too much away, but being able to attract the attention of those high net worths or the investors. And in terms of angel activity, Sue, in Lancashire, is there more we can do to showcase the activity that we know happens, but it all sort of very much goes under the radar?
Yeah, and that's part of the work that I'm doing, because I'm sure that there's high net worth individuals that are thinking, I might like to invest in a certain type of business, but might not know exactly what you said, where to find these businesses. And I think there's something that we can do, and that's why I'm working with partners to figure out exactly what it can be, is to highlight these deals, anonymise them. You don't have to say such and such put 50,000 into such and such a business. You can say, you know, a medtech business in Lancashire receives some angel funding, enabling it to do this. And what that does is that promotes that business, that idea, to gain traction, to get noticed. And it also says to other investors, oh, there's an ecosystem going on here. Because there's, you know, a known ecosystem is sort of in London, you know, in Manchester, I believe there's one around Cambridge. You know, it's, you know, how do we get the disparate parts of the financial ecosystem in Lancashire, which has got good traction, but a lot of it it's all going on under the radar, so we're not understanding it, and it's confusing for businesses and entrepreneurs looking for money.
So if there's anybody online with some suggestions, I'm sure you'd welcome feedback
Absolutely,
as well.
I would.
Or lots of money.
I just want to move on a bit to the sort of the sectors, the important sectors in Lancashire. And some of those obviously were heavily impacted during the COVID and during lockdown. I'm thinking particularly tourism and leisure and hospitality, but perhaps also manufacturing. And innovation for those businesses was really key to enable them to survive and maybe sometimes even pivot. Is there more that Lancashire can do to help those sectors, or what's been done so far to help them during that time and then going forward?
If you don't mind, I'll take that question to start off with. So in terms of what we did, so Boost provided some government, it was a conduit to feed the tourism and sectors, leisure and hospitality sectors. So some grants were provided to help them digitise their business, so there were less touch points, and that was very successful. You know, a lot of small businesses, you know, valued that help and have, you know, embraced that new technology, and because they've been helped to do it. You know, the government have brought out some new programmes about help to grow, and I think that there's two of them, one about management and one about digital. So again, there's national programmes that businesses can look at. You know, and in terms of what the Lancashire Enterprise Partnership did, you know, we have our sector groups, one of which is the advanced manufacturing, one of which is tourism, culture and place, you know, and we've got 4 other groups as well, and each group are working towards delivering an action plan. Aerospace Task Force did one immediately because actually that manufacturing sort of stopped straight away, but has recovered since. So and some sectors weren't immediately affected by COVID, maybe more by Brexit, so such as the agricultural group. So we've got intelligence, they're all business led, those groups, and we understand what they're doing. Each group is doing their own action plan and working through that to help the sector. So businesses out there that, you know, look on the LET website to see who our sector groups are, where they are, you know, contact us if they want to, you know, contribute, want some information about it. I'm sure we'd welcome that suggestions.
That's good to hear.
How we can help.
And sectors in general, Graham, do you find when you're raising finance for businesses, is there some sectors that are harder to get funding than others?
Yeah, it's interesting. I've been in a conversation, a Zoom conversation this morning with a guy who runs a manufacturing business. In fact, 2 people run a manufacturing business this morning. Their biggest issue isn't money; it's people and supplies. They're the biggest issues they've got. They haven't got enough people. In fact, I've got one in particular is looking for skilled metal bashing people, and they're just struggling to get them. And but the other one is really struggling with supplies. And so I think COVID's been quite strange, because I think some of the sectors, maybe some of the hospitality, they shut down and they cut loads of costs out and people got furloughed, etc. I'm not saying they did well, but they sort of they seem to sort of box that in, I think, or I haven't heard anything to the contrary. I think it's now, as we're coming out of COVID, that some of the particularly some of the manufacturing companies, in terms of product and in terms of logistics, are really struggling, and they're struggling with cash flow, and that's the sort of calls I'm getting at the minute. So if anything, I'm having more problem with manufacturing than I am with some of what you maybe call some of the traditionally COVID affected companies, because they, like my local bar, they just start up again. They put loads of free drinks on and stuff, and everybody's back, and it's and as far as I know, they've certainly got enough beer. They're not saying they haven't got enough beer. So it's some of the other more traditional businesses I find, and logistics in particular as well, is a problem.
And just interested then, when you're talking to those businesses with those particular issues in manufacturing, when you're sort of looking around at who could fund them, what's the feedback are you getting? Are they still sort of quite risk averse, looking at the balance sheet of these businesses, or looking at the revenue that might have dropped off in the last 18 months? Or are they sort of more forward looking to see, okay, that was then, let's take a forward look now and see what the future is for this business?
I think as long as you've got a good story about what you did in COVID times, lockdown times, when I say good story, that is, if you just sat there and did nothing, then that's not very good. But if you deferred your VAT, if you furloughed people, if you did everything that the government, to be fair, said you could do, and you then innovated around that some of the things you've done, and there are loads of people who've done loads of innovative things, particularly manufacturing, about how they work, then I think the funders like that. I think if you just sat down and did nothing, they don't like it.
Yeah.
What did you do with your time? You've had 18 months to sort this out. So I don't think it's sector driven. I think it's what you did during that time.
And being able to articulate that
and be able to
to a
articulate
funder.
that.
Yeah. Okay. Well, thank you both very much. I think we may have some questions from the audience as well.
Thanks, Gaynor. Yeah, we've had some questions coming from the chat, so I'm just going to read a couple of those out for you, for the members of the panel. And the first one is, are you seeing a variety of businesses in Lancashire applying for and succeeding in getting finance for innovation? And I guess I'll just extend on that and say, what sort of, if you are in terms of innovative businesses, what sort of common themes are you seeing about the businesses themselves? What sort of things are you seeing in successful businesses?
Yeah, we were chatting about this briefly earlier, weren't we, about what is innovation, and it's different for every type of business. What could be really innovative for one business is just business as usual, run of the mill for another. So when we talk about innovation, it doesn't have to be scientific, world-breaking, new technology. It's something that a business is doing that's perhaps stepping out of its comfort zone, or looking at a new market, or pivoting into a different area. That, for that business, is innovative. But I think it goes back to how do you present that? How do you say when you're going to talk to a funder, this is my business, this is what I want to now do, this is why I want to do it, and telling that story and finding the right funder that can support you.
I think it's always come back to that. Funders want their money. There's only three sorts of funding for me: debt, equity, and grants. I don't deal in grants, so I'm fine with that one. I'll leave that to someone else. And debt and equity, people just want the money back plus interest, and they really want to know they're going to get the money back plus interest, and then just on the safe side, we'll have some security there. So that's a little bit of a problem for, I know, a lot of people. And one of the benefits of Seagulls was the lack of PGs up to 250, and that was 250,000. That was great. And the recovery loan's the same, and it's the same principle. So if you are still struggling, but then you've been affected, I know quite a few businesses that were developing things to launch. How many businesses launching stuff on March 2020, and then lockdown came, and then it all got put to one side. But then they've worked through that, and now they're doing it again. They're launching again, and they are eligible for recovery loan type funding, as long as they've got that good story, and they are starting to get those funds up, seem to be coming through now.
Yeah.
And then on the equity side, I can't remember, you asked a question about what sectors are you getting, but anything that improves productivity. I'm helping a health tech business. Health tech's great at the minute because the health service clearly needs to be innovative, and there's an organisation that clearly needs some innovation on everything, doesn't matter what level it's at. So anything that does health tech, I think, is good.
Yeah. I think so. You mentioned that there was particular support for those retail businesses to digitize, for example, or to get themselves online, and for them that would be an innovation. So it's not just about white coats and laboratories, is it?
No. But in terms of people actually getting their hands on money, You know, up to now, the Northern Powerhouse Investment Fund collectively have invested over 19 million since 2017 in Lancashire businesses. It's quite a good quarter last quarter, and that's debt and equity funding. And I'm hearing from Access to Finance that, again, from other funders, companies are getting their money, but I haven't got a quantum in terms of what percentage, the actual number of deals done. We're never going to know that in Lancashire, or the percentage of companies. We don't really. I haven't got a number of how many people have applied and not been successful. But our Access to Finance service is there to support businesses to help them find that finance that they need.
Yeah. Thank you.
Great. And then next question, actually funny, follows on from a couple of comments there. I think that in terms of this kind of grant funding, debt funding, equity funding, so it comes in quite nicely. And the question is, how does Innovate UK grant funding? Of course, a lot of businesses in the region have been really successful in acquiring Innovate funding. How does that interplay with other funding sources? And does this help or hinder and encourage other funders?
I'm happy to take that. I mean, I'm not an Innovate UK specialist, but if you're looking at finance, if you've got a financial package, if you've got grant funding, I think that that's always a hook to get other funders involved. I haven't known a funder not being turned off and saying, "Oh, I'm not going to fund them because they've got a grant." I've never heard that. I don't know about you. I always think it's less money to pay back.
Well, it's less risk, isn't it? Funders are a risk-reward thing, aren't they? So the more you can reduce your risk, the arguably the more likely they are to fund the balance, because there's less risk there. I say to people, go on the Innovate UK website, see what you can see. I don't advise on it. I just say there's funding there. If you want to go through it, then do it. But
it's quite a rigorous process, though, from what I know about it. To get an Innovate grant, you really do have to put the work in and demonstrated, you know, that you know your business, you know your innovation, you know that you know your competitors, you know your market. So I agree, Sue. It is a bit of a sort of a stamp of approval, if you like, just from Innovate UK. And I would definitely shout about it if I'd got an Innovate UK grant to go and talk to other funders about it.
Yeah,
certainly.
But any grant, you know, not just Innovate UK, any grant that you get is always going to supplement your cash flow, whether you need extra cash flow through debt or equity funding, or, you know, it just helps to make sure that you know your business is, you know, properly capitalised.
Okay.
So a couple more questions. There's one actually that I had, if I may interject this one, but I was really interested. One of the things that I heard you talking about was that really early stage businesses and, you know, how they, you know, one of the challenges, especially when they're looking at sub 25k. And I guess, you know, in Lancashire now, we're doing a lot of work, and there's a lot of really good and interesting startups out there. I heard terms like, I think there was sweat equity, and if it hurts, if it goes wrong and it hurts. So I just wondered if you could just expand a little bit about, you know, a little bit more for those businesses, those really early stage startups. What do you mean by those terms, and what?
What I mean is, so if you take the extreme, you've got someone who comes with an idea, and they've not done anything else, they've just got an idea. That isn't going to go anywhere. It's not going to go anywhere with the funders who I know. So what funders generally like, and I'd say particularly some of the angel funders, the high net worths, they want you to have done something. So you've got your idea, you've translated that, you've probably tried to do some things. So let's just say it's a mobile phone app, for the sake of it. And you've tried that, you've tried it with your friends, and you've done a bit of a survey, and you've got people using it, and you've had feedback from them, and so you've done something, but it's cost you to do that. So the question is, where you got the money? So have you got the money, or has your parents or your rich uncle or whatever? And that happens all the time. I know loads of people where their uncle owns 5% of their business or 2% of their business, etc. But you've done something and you've got some traction, is the word I use. What traction have you got so far on whatever it is you're doing? If it's a service or, it doesn't matter, but you've got to have some traction. I think it's difficult to get funding unless you've got some traction. And generally that means spending some money. So that if it all goes wrong, then you probably put money and time into it, but also your friends and relatives have put money and time into it, and you that's the sort of hurt money, because if it all goes wrong, you won't get invited to weddings and things like that in the future. So, or you'll be put on a really bad table. So
not everybody though has got a rich uncle.
No,
Graham.
absolutely not.
And sometimes it can just be about the time and effort you personally have put into it, isn't it? So you've taken some of the pain.
Yeah.
Yeah.
And so many are working in jobs and then doing that on the side.
Yeah.
Particularly some of the software people.
Yeah.
They often do that. They'll work at night on this project that they've got, and that's the real hurt money. They're working effectively and not getting paid for it.
Yeah.
Whatever.
Yeah.
And I think people need to recognise that as well. They think, like they say, they come to you with an idea, and it's not just an idea. It's been tested, or they might have been prototyped, and it's and you ask them, well, have you got a company? Have you spoken to somebody about, research and development tax credits, anything to help fund your business? And to reckon how much time have you actually spent developing your product? Because if you were paid for that time, how much would that amount to? And that's the value of that sweat capital.
Yeah.
Does that help?
That helps, and it really nicely leads on to the next question. And I guess the final question, really, I'm thinking about those people, and as you said about, not everyone's got access to the rich uncle. And I think for some people in that kind of startup scenario, particularly that early stage scenario, they don't always know where to go. Who's the accountant? Which accountant should I speak to? Who's the bank? Which bank should I go to? Who's this? Who's that? So the question that's in is, and perhaps for Sue, this one, because you mentioned already about Boost, but what is the best start point for us? For a business in Lancashire, what is the single point of information to go to get going on this journey? Where can we find the support? Where's the access available?
It's actually on the Boost website. There is a telephone number there if you want to speak to somebody. You can email them and they will respond quickly, and they will allocate you somebody to speak to, a relationship manager, to find out exactly where you are in that journey. Is it right back at the beginning, I've just got an idea, so I need flying start, or maybe I've got a bit of traction, or maybe I need some help prototyping? That could be an innovation clinic program. As I said, there are 79 programs, so and please don't ask me to
Read them all off.
read them all off. There's only a few that I can remember.
Absolutely.
But that is a really good place to start. And if you find 79 programs mind-blowing, that's nothing against the 20,000 financial products that are available in Lancashire. So I suggest going to the Boost website, calling them, speaking to somebody, or sending an email, and then you can articulate what exactly you're looking for, and they can direct you to the right product or program for them.
Graham, is there anything you want to add to that in the world of startup finance, getting help and support?
No, I mean, there's a lot of free services out there that do a great job. Being honest, there's probably just not enough people to do it, and particularly in the face-to-face. It's just a shame there aren't enough. But then you just need to push. I would advise anybody to go to Boost and push and try and get an idea of the options available, and then if you can get one of the access to finance people to speak, and it's not that they don't want to, but that if you can get one, that they'll take that advice, because they will spend the time.
Yeah.
And they do a great job. So
Yeah. So it sounds like there's support out there. People just need to know where to go and to ask for it.
Yeah.
Okay. Thank you very much.
And there was a final question as well.
Okay.
Just quickly, I think we'll have to wrap up after this. And that was lots of high-risk R&D businesses, especially kind of coming out of the universities in the region. What sort of appetite do funders have for those sorts of businesses? And is there any way in which the businesses can help underwrite the risk?
Depends. You say high. What did you say? High risk,
high risk R&D businesses.
Yeah, it's always about risk and reward, though, isn't it? Because generally, the higher the risk, the greater the reward. So some people won't. Some people will not. Some funders won't be interested in that reward. it's just too risky. But others will. Some people will take that on, and I think what I've learned doing this for so many years is not every funder's right for every particular problem, and therefore you have to find the right funder for your particular issue, or hopefully funders for your particular issue. So there will be. It's not that there won't be someone who fund it. Their demands may be greater though. So that, let's just say it's a share. So if you watch Dragon's Den, you'll see, well, they want, I don't know, they want 50 grand and they'll give away 10%, but the angel believes it's more worth 30%, and that's a sort of equation.
That's a whole
you
new
have to,
conversation
that's a
around
whole new
valuation.
conversation.
Yeah.
But in terms of, R&D, a lot of the universities have got a lot of intellectual property. They do a lot of research there. We have a lot of, good, strong links with the universities. It's lean on them to get their expertise to get your product and to de-risk it as much as you can before you take it to the market or take it to try and find some investors, because there's often investors that specialise in or particularly like spin-outs from universities, but it's finding though that network, and that's the piece of work that I'm on with at the moment to try and find out how people can access the right finance for them at the right time.
Right, thank you very much. I'd like to thank Graham. I'd like to thank Sue for your contribution today. Much appreciated. Really, some really valuable content there, hopefully. And if anybody wants to contact any of us after the event, then please do get in touch. But thank you very much for your time, and have a good afternoon.